Hello guys, Steven Ducks here. Welcome to this video. So today I'm going to do a recap about the recent runners, especially on some of the tickers that doesn't really fit the criteria. I do see a lot of people over trading, so I do want to cover some of the tickers, especially on the lower floats, so you guys don't over trade in the future. But other than that, let's get into the video. Alright, so the first one I'll talk about will be SHPH. This one was an IPO. The current IPO plays, they are really difficult to short into, especially when they're just announced IPOs. I think we had one on HKD, was running on a 300k volume, and that one squeezed to 2600. So on lower volumes, if they trade less than 1 million or less than 3 million shares in one day, then it's pretty much not tradable, and the spread is too big, sometimes even 10%. As long as the volume exceeds over 3 million, it's okay to trade, but it has to be extremely overextended. On the first green day, never touch IPO on the first green day. That's not really ideal. It doesn't really matter the consistent increase in the float after the first day announcing its IPO. I would prefer that it traps large amount of volume up 2 day or more than 2 days around. Then using the consolidations times the price and as your resistance to short into. So that's my ideal thought about shorting those IPOs. But then we had a massive drop on Friday. We don't have any type of resistance around in the 40s. It consolidated up in the 40s for a while, and it dropped with a really low volume. This is not, I would say, a consolidation breakdown, because the ticker itself already faded 75% and it bounced off that low. Typically on a regular chart, these type of charts can stay up there forever. They don't have to drop, but for IPOs, some they do keep drop and drop more than 100% from where they started. So then we had one of the bounces on Friday from 14 to 24. Extensions about 60%, I would say, yeah, 70%-ish. We only have resistance up in the bounces area, so it's 22 to 24. And on this day, only traded 4 million volume. So using bounce shorting SHPH is quite dangerous, especially on the uptrend and the stock is on parabolic. These type of trades, the market is training those people that to short early, and they will either give you another HKD or give you another BBBY to squeeze everybody out. Then the money gets rotated again. So this is one of the seasonal trades that the stock, pretty much the market gives you are really low runners, lower flow, and they only spike about 40-50%, then they drops and you short, you got lucky. And in the future, then the market comes back and catches all the people that shorts early, and stock goes up 1000%, and then they basically lost money on those massive parabolic, and the money gets flowed back into the people that short with patience. So be extremely careful with the current market condition, since we're in a bear market. The data is not quite stable. So for this specific data, I want to make another video about it, especially on to adapt the current market conditions. Then we had HKD that bounced up on Thursday. The stock traded about 600k volume. On this day, only traded about 700k volume. First day was like 1-something million, 1.6 million, then 1.4 million. Extension is about 1000%. This is probably shortable. Didn't really quite catch the downside. The volume is really low, so especially around here, only traded about 600k volume. After the massive round, this is a small bounce. Pretty much it faded all the way down to where it spiked from the 40 breakout level. I was waiting on the bounces, testing the consolidations on HKD around 280, 260-ish. Didn't really touch it because the overall volume is way too low, just to sizing relatively amount. And typically this tickers doesn't drop all the way down, almost 100% from the top. So all the recent runners, they fade more than 75%. I think it's quite abnormal compared to the last couple of years. Typically they only do 75%, then they slowly bounce back up and slowly fade back down again. This one faded more than 75% and it pushed less than 20%. So, and the volume was 60K on a 2-minute candle. That is pretty much untradable in terms of volume. So I would say next time when you see these type of tickers, try to stay away far as possible. And the spread and the volume, it's really difficult to manage your risk. And I would suggest sizing small. And when HKD came up, they also bought up AMTD. This is the sympathy play of HKD. This one wasn't up that much because flow was quite big and it's not generating enough volume. So not many people are chasing AMTD. It's under $3 stock. So this is also difficult to short. You can't really size in too much because you increase the risk while sizing into a stock that's really cheap. There's no consolidations. There is a massive support around 2. So if you short it around 230, in theory, you should cover somewhere around 2. Then it's, as I said, in the normal market conditions like 2021, it's not going to break through the support, but it actually did. These type of tickers are not following the statistics, and for me, personally for me, I have to track more data to actually get the hang of all those low volume and low price ticker stocks. But rule is still rule. Stay away from the micro floats, especially, and stay away from the lower volume. If the current day volume trades less than 1 million, or the estimated volume is less than 1 million, do not touch it. It's pretty much impossible to control your risk. So that'll be the end of this video. Thank you very much for watching. If you like the video, make sure to hit the like button and subscribe, and I will see you guys in the next one.